I'm University of Illinois Extension's Todd Gleason. This is a FarmDoc Daily webinar. Thank you for joining us for this updated supply and demand for corn and soybeans webinar. The implications of the USDA grain stocks and acreage reports released on the 30th day of June 2022. Our panelists for the day include Scott Irwin, agricultural economist here on the U of I campus, along with Joe Janzen, also from the University of Illinois, and an agricultural economist. I believe, Scott, are you beginning with our program today?
Actually, Joe is going to jump in first, so I'll turn it over.
Yes. Joe's going to get to take up the old crop, and then you'll turn your attention to the new crop. Joe, good afternoon to you. Thanks for being with us.
Yeah, good to be here. Welcome, everyone. We're going to start off just kind of setting the scene by looking at what's happened to corn and soybean prices since last harvest. We had a big run-up in prices. You can see that both on the soybean chart on the right, the corn chart on the left. Since December 1 of 2021, prices have increased by about 35%. We saw a big run-up earlier in soybeans when we had a lot of news about Brazil and what their soybean crop looked like, going into their harvest in January, February, March. So soybean prices ran up first. Corn prices kind of moved later, especially on the news of the war in Ukraine and the big acreage surprise that we saw in the March prospective plantings report, where we saw much higher soybean acres than expected, much lower corn acres than were expected. And that story's changed a little bit. We're going to talk about that today. Markets moved more or less sideways through April and May at some pretty high price levels. And now we've seen kind of some of that high price action kind of drop off. We saw a big decline in prices here in mid-June, both on old crop and new crop soybeans, and especially on new crop corn, not so much on the old crop. But we've had obviously a big piece of news come into the market today with this June acreage report. So, Scott, if we can go ahead to the market reaction for today, just to sort of see what's happened since to prices. During the day today, we saw corn prices move sharply lower on the open, again when the report was released, and we're down in the neighborhood of 625 per bushel on new crop corn futures. For soybean futures, we saw prices increase early. We'll talk about why that happened. Prices increased right upon the report release. Seen prices kind of come back a little bit from where they were. New crop soybeans did trade over $15 a bushel today, but we've seen the market come back to something in the neighborhood of $14.70 or so. Before we get into the acreage numbers, which were kind of, I think, the meat of the news today, I want to talk a little bit about the old crop supply and demand situation. USDA also released its grain stocks report today, which measures the quarterly inventories of grain held in various positions in different locations around the country. Trade was looking for modestly higher corn and soybean stocks than we saw last year, and we got numbers in the report that were very much in line with trade expectations. So the corn stocks estimate for June 1st coming in at 4.3 billion bushels. That was right in line with the trade expectations. The survey number was just 3 million bushels below that. So not really much of a surprise. This is, we see that these sort of the difference between the trade guesses and what USDA comes out with, those numbers kind of fluctuate around zero. Sometimes USDA is higher, sometimes USDA is lower. USDA was a little bit higher than the trade, but just by a negligible amount. And so that this wasn't really the news that the market was reacting to today. Moving forward, this takes us to the old crop balance sheet. So we've left most things on the old crop balance sheet where they were. USDA was forecasting total corn ending stocks in their June WASDE report of about 1.485 billion bushels, getting to a stocks to use ratio right at 10%. We think most of the numbers that go into this report, obviously the production and supply side here, we've left completely unchanged. Those numbers are pretty solid at this point, given that refers to the 2021 crop. We have made one change here, revising the old crop corn export number lower by 75 million bushels. And that increases our ending stocks estimate by a little bit. Still very much kind of in line with sort of the drawdown in stocks that we saw in the June stocks report, getting us to a slightly higher stocks to use ratio of 10.5%. The season average price we've left unchanged, given sort of the stage that we're at in the marketing year, with just a few weeks to go before we roll into the new crop year on September 1. The reason for our change in the export number comes on the next slide. We can see that WASDE projected exports for 21-22 are at 2,450 million bushels, or 2.45 billion bushels. Committed sales are slightly below that, and we only have about 12 to 13 weeks left in the marketing year to get to that WASDE projected number. Accumulated exports coming in right at around 1.8 billion bushels. That's actual shipments to date, that green line. We just don't think we're going to quite get to that WASDE projected level, given the export sales pace in corn that we have to date. We're going to need to move a lot of corn to get to 2.45 billion bushels. Okay. On the soybean side, the old crop soybean situation, again, very, very similar. Average trade guess was about 965 million bushels, for June 1 soybean stocks. USDA came in at 971 million bushels. So again, very much in line with trade expectations. This is well above last year in terms of soybean stocks as of June 1, but we've seen really strong usage pace, both on the export side and on the domestic crush side. And so we think that, again, this sort of seems to be in line with what we expect for supply and demand on the old crop picture. Not much of a surprise. USDA just 6 million bushels higher than the average trade guess. Turning to the old crop soybean balance sheet, we've left things basically unchanged. We're in a very tight supply and demand situation right now. That supply and demand situation gets us down to about a 4.6% stocks to use ratio, which is historically quite tight, and that's why we're seeing relatively high prices. But again, we've left everything unchanged from what USDA had put in their June WASDE report. Turning then to the big news, we're going to turn to just to really briefly touch on the old crop soybean export. We've already got committed sales on the books in excess of where USDA is projecting for the entire marketing year. So if we can turn those sales into shipments, even if we see some cancellations, I think we can get to that WASDE projected level of 2.17 billion bushels. And so that's sort of why we've kind of left the old crop S&D picture unchanged. That leads us to the big story, which is those June acreage numbers. And I'll turn that to Scott. He can kind of lead us through what USDA said about crop acreage.
Thank you, Joe. I just add one comment there on the old crop soybeans is that you might look at two numbers. You know, we had much larger June 1 stocks than a year ago, yet lower ending stocks projections. It's just as a measure of how robust soybean consumption has been this year. And as long as those sales turn into shipments on the soybean export side, we don't see any real risks of not meeting that big use expectation. So again, the big news today for the markets was the release of the USDA's June acreage report, which is basically complete set of estimates about what was actually planted this spring. There are some extenuating circumstances in the upper Midwest due to delayed planting and wet conditions, and that's going to be a theme through our comments regarding the acreage numbers. And so I want to use this chart to kind of frame what Joe and I think explains what's happened with the acreage numbers. So this is a way that we basically try to account for all crop acreage in the United States. And that's the sum of what is called principal crops. That's all major and minor crops planted in the spring, including hay acreage. That's the green part of the bars. The blue is our conservation reserve program acres. And then the red are prevented plant acres. And so we add them all up, and that should be accounting for virtually the entire acreage pie. So for 2022, we have two bars listed, okay? The one with M, 2022 M, is the totals as we projected them based on the March Prospective Plantings report. And so that report indicated principal crop acres of 317.4 million acres. So we would add to that, we know from last fall's numbers from the USDA, 22.3 million acres in the CRP. And then we projected 4.2 million acres of prevent plant. So basically almost double what we had last year, but that's right at the historical average if you throw out 2019 as an outlier. And so that's how we got to a total acreage figure of 343.9 million acres. So now roll forward to today's report, and that's now our current representation of what the acreage pie looks like is the bar for 2022 J. That stands for the after the June acreage report. That report showed a decline in total principal crop acres from 317.4 was the estimate for this year in the March report, dropped 1.1 million acres. So the question is, do we think that the total acreage pie somehow shrank by over 1 million acres between March and June? We don't think so, although we have to admit we don't have all the information yet to know for sure. But this is our interpretation of what has happened. It's not that the acreage pie has shrunk, but rather that we've moved a bit more than 1 million acres out of principal crops into prevented plant. And that's primarily in North Dakota. As an example, we know from the report that total principal crop acres in North Dakota declined 1.6 million acres between March and June. And that almost surely has to represent prevented plant acres up there because of the extremely first cold and blizzardy weather they had in April, and then extreme wetness and extremely late planting conditions. So that's the important framing of for understanding the big trends in the acreage report that was released, is we just think it's the impact of prevented plant acres in North Dakota, to a lesser extent in South Dakota and Minnesota, basically in that upper Midwestern tier. So that's really the big story. Here is a state by state listing of the change in principal crop acres from the March estimate. So note, this is not versus last year. These are the changes from March of 2022 to June of 2022. And you can see the big drop in North Dakota, down 6.8%. That's that 1.6 million acres from March to June in North Dakota. And then you can see basically a mix but with North Dakota down 1.6 million and total principal crop acres in total across the whole U.S. down 1.1 million acres, the net of all the blues and reds is a small increase of about 500,000 in all the other increase of 500,000 acres in all the states outside of North Dakota. So that's kind of what's going on in terms of the total acreage base. All right, let's move on to corn and soybeans. Not only were total principal crops reported, of course, today, but also all of the individual crop estimates for planted and harvested acres. Going into the report, the average market guess was 89.9 million acres on corn, and one of those rare June report days where the market really nailed it. That's basically exactly what the market expected, so there was no real surprise there. And the acres harvested based on that, 81.9, so 8 million acres less than that. So no big surprise on planted corn acreage. Now, that total was up 400,000 acres from the March estimate, so a small increase. And so you can see here, particularly, again, outside of North Dakota, where corn acres dropped 600,000, there was generally a small trend to planting a bit more corn this spring. And we'll see that that's a part of the story when we get to soybeans, is that we did have some real delayed planting, less than ideal conditions this spring. And then the interesting theme is, as at the margin compared to the plans as of March, that when push came to shove, farmers in the U.S. Faded towards corn and away from soybeans. And you can see this on the map with blues and grays representing no change or an increase, and the red would be a decrease in corn acres relative to March. And there's just really outside of the Dakotas, in major producing areas, there wasn't a decline in corn acres. All right, let's moving on to soybeans. This was the big newsmaking item in the report today. And what we see is that analysts were expecting 90.4 million acres going into today's report, and the USDA reported that to be 88.3 million acres. So a major decline in soybean acres compared to what the market was expecting. In fact, the 88.3 was lower than the lowest trade estimate that I've seen going into the report. So this was a major surprise to the market. So again, continuing that theme, what we saw was a big decline in soybean acres in North Dakota. They dropped 1.1 million acres out of soybean production between March and June, but that wasn't the only place. South Dakota was down 310,000 acres, and Minnesota was down 420,000. That totals 1.8 million out of the 2.6 million acre decline from March to June. So that's most of it, but it's not all of it. Those three states are, not all of, there's still 800,000 acres on net, kind of a little bit less soybean acres almost everywhere. Notice that here in our home state of Illinois stood out as increasing soybean acres, as did Kentucky. So the net is U.S. is now down 2.6 million acres for soybeans compared to that estimate from March, and it's spread out all over the place. But the biggest decline was in North Dakota. I presume that's where a lot of the prevent plant acres are going to come from. I keep talking about prevented plant. I'm inferring that that's where the lost soybean acres largely went up in the upper Midwest, but we won't get our first official data on prevented plant until August, the same day that the August crop report is released. So that will be really important data to pay attention to when it starts to be released in August, to see if we are getting the above average number of prevented plant acres that I've talked about here in the last few minutes.
Yeah, it's also worth noting, Scott, just really briefly, that USDA does plan to resurvey acreage in those states in the upper Midwest, and that's probably, again, another source of information that we'll get, but not until August.
Right, that'll be really important, because there is kind of I'm really glad you pointed it out, Joe, because there's some things that don't quite add up in some of the states. North Dakota's acreage numbers make sense. Principal crops down 1.6 million, corn and soybean acreage down 1.7 million. That makes a lot of sense. But for example, in South Dakota, you actually show principal crop acres going up, but corn and soybean acreage down 600,000. That doesn't quite add up. So I think it is important to get the resurveying those three upper Midwest states. So you're right. That'll be very important to pay attention to in August, and we might get bigger changes up there than we are used to, because they'll be doing a focused resurveying up there on acreage.
And just because you didn't find those three states, they're North Dakota, South Dakota, and
Minnesota. Right.
Usually, by the time we get to this point, planters have stopped rolling, and we know that planters were still certainly rolling up in that part of the world well into June, and probably still acres that are probably getting spot planted right now, if they can get out into the field. So more information will certainly be better there.
Absolutely. So what we want to do now is move into our discussion of the new crop situation for corn and soybeans. And so I'll start off with corn, and then Joe's going to cover the soybeans. So what you see here, we have as a basis the 2021 U.S. corn balance sheet, and then we have the June WASDE numbers for 21-22 and 22-23. Again, important to emphasize that today the USDA released the grain stocks and the acreage report, but did not update their balance sheet estimates. That will come with the July WASDE report coming up in a couple weeks in July. So what we've done is we put our own forecast of the 22-23 corn balance sheet in light of the numbers that were released today by the USDA. So I'm going to go through those and some of our thinking, and jump in here, Joe, at any point to improve the presentation. So we take the USDA's numbers today in the acreage report as kind of a given. So we have 89.9 million acres of corn planted, harvested 81.9. The USDA's in June was at 177 bushels an acre. We're right at that time of year where, yield forecasts can change a lot, and I'll get to that in just a minute. But something in that 175 to 177 area, makes sense to Joe and I. So we landed at 176. And our beginning stocks are, again, a little bit higher because we're fading old crop corn exports in the current marketing year by 75 million bushels. And that gives us a production number of 14.4 billion bushels added up. And we're essentially at a total supply projected for 22-23 of 16 billion bushels. And want to talk just a little bit about that supply side further in terms of particularly on the yield side where we might be headed. And I think that's really important in understanding price movements today. So this is a map of the U.S. 30-day precipitation as a percent of normal as of today. And so the scale shows, what if you're a farmer, you do not want to see yellow and red. That means it's really dry. And greens and purples and magenta, that scale means you're way above normal. And so we can see in the last 30 days that a lot of dryness has developed throughout the Corn Belt. And we see in particular, really dry areas have developed in northwestern Iowa, almost all of southern Minnesota, and also here in east central Illinois and much of Indiana, we get the dark browns and a little bit of the red. So that's the picture. It's been dry. We all know about some of the superheat that we had mid-month. And the net impact of that is that we've seen the crop conditions ratings for corn declining. This chart shows the first to the most recent crop condition rating. We like to look at the sum of the good to excellent ratings for the 18 major producing states as a summary measure of that information. And we can see that that's good to excellent sum started at 73% and has dropped 5 points all the way to 67%. So we're now just sitting on the 5-year average where we were above it early in June. And that's a reflection of that dryness. So a lot of concern about dryness and heat throughout June and where we might be headed in July. Now, what's really interesting, if you follow the weather forecasts, is that they have been building more and more precipitation. This chart shows, as of today, 7-day precipitation totals from June 30th to July 7th. And if you looked at this map just a day or two ago, it was not nearly as favorable. So the weather models are beginning to build in quite a bit more precipitation. Joe and I think that this is the major reason why we saw the big turnaround in the soybean market from a basically plus 24 to a minus 24 the last time I checked, and new crop corn's down 35. Those are typically related to some kind of big weather news or some kind of supplier demand shock. And, you can just remember that map of where the dryness was located and look at where we're now projected to get basically at least an inch of rain through almost all of the dry areas. And some of those areas, especially look at southern Minnesota, right now, they're in the target bullseye area for 2 to 3 inches. And so if this verifies, that's a big deal in terms of yield prospects, because this would be basically, compared to just a few days ago, some unexpectedly large rainfall totals right as we're heading into that critical pollination period for the U.S. corn crop. So this is a big change in the projections of weather that just so happened to occur on the same day as we have these big USDA reports. And the market, I think, is interpreting the net of this weather news as being more bearish on soybeans than the acreage news that we received. So that's the way Joe and I are interpreting. I don't know if you want to add anything on that, Joe, or not.
No, I thought maybe you just want to talk about sort of thinking about the crop progress and good to excellent ratings, and how much of that sort of is there past dependence in that, where we're in this period of declining crop ratings, and how much can sort of the market turn on the basis, the market and the crop turn on the basis of some maybe more favorable or less favorable weather news that comes along?
Yeah, you do tend to see, I believe, and I don't have any, hard evidence or research to back this up, but my perception is that the crop conditions ratings are a little bit smoother and take a little bit of time to react compared to weather news. It's important to remember this is a 7-day projection of precipitation. it's changed quite a bit in the last couple days. It could change again the other direction in the next couple days. So, that's why the market is so sensitive to these short term projections on the precipitation side. So, important point that we're, right there where whatever happens with precipitation is going to, in the next 2 to 3 weeks, is going to matter a lot to whether we end up, in the low 170s or mid 170s on corn yield, or it's still feasible to climb back up to 180 plus if we got really good weather the next 2 months. So the market's really going to be volatile and dynamic based on what happens with the weather in the next few weeks. So before I run out of time here completely, I want to just talk a little bit about the use side for the new crop corn. We're sticking with the USDA number on feed and residual, 5350. With the stocks report, we don't see anything to cause us to differ from that number. The two places where we really do differ is on ethanol and exports. I mean, we all know about $5 gasoline prices, and I'm going to jump forward to that. This is the ugly chart for U.S. drivers. Sitting there now about for all gasoline grades, and that U.S. average price above $5 a gallon, and we see consistently now gasoline use on a weekly basis in the U.S. falling behind the pace of 2021 by anywhere from around 2 to 5% right now. Now, of course, forecasting crude oil and gasoline prices is not easy. And, maybe this spike will recede as we go into the next marketing year. But it seems like it's prudent right now to fade the ethanol use for the next marketing year based on the impact of those high gasoline prices. So we drop our projection by 100 million bushels, and that's based on a drop of expected drop basically in 2% on E10 gasoline consumption in the marketing year coming up. Kind of a similar story on exports. We're, looking at them to be a little bit weaker in the old crop scenario. And so we expected exports to come off of the level. You can see the same kind of pattern the USDA had in June. The new crop was projected to be down 50 million bushels. And so we're taking our projection for corn exports down to 2,300, gives us total use of 14,370, and that gives us ending stocks all the way back up to 1629, stocks to use ratio of 11.3%, and we use a price projection of 625, which is still pretty high. And so with that, I'm going to turn it over to Joe to take a look at the new crop balance sheet for soybeans.
Yeah, just one more note, just thinking about exports, and I've noted that we've lowered our corn export number from where USDA was in line with our sort of projections for lower old crop. On the new crop export sales, we did see sort of really a lot of strength early on. This is true for soybeans too. Really, a lot of sales really early back in sort of April, May. We've seen that kind of taper off for corn. Maybe there was some precautionary buying by some exporters, getting export purchases on the books early, but now kind of everyone's in a little bit of a wait and see mode. That tends to be pretty typical when we're in a high price period like we are now. And so that combined with some of the news about possibly higher Brazilian corn exports, especially going to China, kind of leads us to lower that corn export number. On the soybean side, we've again started with today's acreage numbers as our starting point, the acreage numbers that that differ between the June WASDE forecast for 22-23 and our forecast in the far right column are just taken straight from the acreage report today. So that gets us, substantially lower planted and harvested acreage. That was the big surprise in the report. We lowered yield slightly, again on the basis of much of the same factors that we saw for corn. We've seen crop conditions ratings falling. This is again for major producing states in the U.S. We see this trend from about 78% good to excellent earlier in the month down to in the neighborhood of 65%, closer to sort of 5-year average. That leads us to drop our yield estimate just slightly down to 51 bushels per acre. We start with beginning stocks in line with USDA. We haven't adjusted anything on the old crop balance sheet, so we start with that old crop beginning stocks number, or that beginning stocks number that comes from the old crop ending stocks. We've lowered production, obviously, but with both a decline in acreage and a decline in yield, and that gets us to a total supply of about 4.68 billion bushels, which is substantially lower than we've seen in previous years, but again in line with the fact that we're sort of thinking about maybe slightly below trend yields and a pretty substantial decline in acreage. On the usage side, again, we see the possibility for some slight headwinds. We've decreased the crush use here by about 20 million bushels and decreased exports slightly. Again, I think this is sort of the fact that we've seen really high prices and just sort of that high prices tend to ration demand. We think that usage will be smaller, given that we're going to have a potentially smaller crop this year, absent some incredibly good weather news for the U.S. soybean crop. Lowering usage a little bit on both the crushing and export side gets us to a total use of about 4.48 billion bushels, and an ending stocks number very much in line with where we were at on old crop, but below the June WASDE number of 280 million bushels. Our ending stocks number is at 198. We think that, again, we're sort of, Scott and I both think we're kind of in this situation right now in the 21-22 crop of kind of getting down to pipeline level stocks. Just sort of, we're down to just the level that's needed to kind of maintain production and export flows that need to occur through the next quarter and into the next marketing year. We're going to sort of be in that same situation at the end of 22-23. That gets us to an ending stocks use number very similar to last year, about 4.4%, and a season average price forecast of about $14.70 per bushel. Scott, if you want to move ahead. And so we want to also think about maybe a few things that could change. And Scott, you might chime in here at any moment with some of your thoughts. The two big things that we haven't really touched on are the war in Ukraine. That remains a major wild card. This graph just shows ending stocks, the bars, of cereals, that's corn, wheat, and barley, in Ukraine. We know that those stocks are building with the inability for Ukraine to export grain through Black Sea ports. While they're trying to move as much grain through alternative channels, this has created a huge backlog of grain trapped inside Ukraine due to the war. USDA expects Ukrainian stocks to grow from 3 billion bushels, 3 million metric tons at the end of 2021 to 13.2 million metric tons at the end of this current marketing year, and 19 million metric tons at the end of the next marketing year. And that's factoring in a pretty major decline in Ukrainian cereal production, going from about 85 million metric tons last year, expected to be somewhere in the neighborhood of 50 to 55 million metric tons this year. Again, noting that these numbers are very much subject to considerable uncertainty. We have sort of no crystal ball as to Ukrainian and Russian geopolitics, but we know that this supply of grain that needs really to flow out to the world market in some way, shape, or form is sitting there. And if something major changes, this could really change the global supply and demand balance.
Right. If nothing changes, Joe, the way I like to put it, Ukraine, by the end of the 22-23 marketing year, is well on the way to sitting on almost 1 billion bushels of inventories for mainly corn, wheat, and barley, and some sunflower. So, those cereal stocks are, they're big numbers. And at some point that will get to the market, but it's hard to see that happening anytime soon.
No, it just sort of sits out there kind of weighing on and creating uncertainty because the supply and demand balance could change by so much if and when that grain ever does get to move. The one other major sort of, I think, and really want to frame this as a demand side wild card, is the macroeconomic situation. On this graph, we've just shown benchmark interest rates, the 10-year U.S. Treasury rate in green, and the inflation rate given by year-over-year growth in CPI in orange. And so we have seen, obviously, considerable inflation, consumer prices rising over 8% year over year. This is inflation level that we haven't really seen in a very long time. Really, kind of in my lifetime, this is kind of an unprecedented situation for price levels in the United States to grow at this kind of rate. And we have seen interest rates also climbing higher, creating a whole set of kind of uncertainty in the macroeconomic picture. Lots of questions about whether we're in a recession. How that relates to grain markets specifically really is that, their global demand is a major driver of commodity prices. And if we do see a global macroeconomic slowdown, we think there's, potentially huge risk for global grain demand. If we are in a recession, this is going to sort of limit demand for corn, soybeans, and other ag commodities. Lots of people talk about sort of a tie between inflation and commodity prices. But the mechanism that we're really thinking about here is really in terms of economic activity being a driver of global commodity demand, and specifically global ag commodity demand.
Hey, Joe, I'm just smiling to myself because our age difference is showing, because one of my formative experiences was living through the high inflation years of the 1970s and early 1980s. And what's other people that are my age that I talk to says this feels remarkably a lot like that. And in fact, I saw a well-known economist yesterday, we hear words like stagflation, which we haven't heard for almost 3 decades. So very important to see how this macroeconomic situation evolves.
Absolutely. You can help coach us through it, because my generation certainly needs a primer on dealing with macroeconomic uncertainty.
Yeah, well, I guess I'll go back to the one thing that I never have forgotten from that experience is on the chart that we've put together here, it implies, massively negative real interest rates. So that's the nominal minus the inflation rate. And that's not something one way or the other that's going to persist.
Right.
So why don't you close this out, Joe, and then we'll get to some questions.
Yeah, let's move to our sort of closing thoughts and recapping the situation. Again, on the grain stocks report, which was sort of the first piece of news that we covered, really everything in the in those June 1 stocks numbers are kind of in line with trade expectations. It does imply pretty strong usage through the last quarter of the marketing year for corn and soybeans, but we think that that situation is justified, and so our forecast for feed and residual use for corn and really all other parts of the old crop balance sheet are largely unchanged. Maybe some decline in corn demand in the last quarter of the marketing year, but that's not really the big picture. The big surprise here was on the acreage side, 2.6 million fewer soybean acres than USDA projected in its March prospective plantings report. A little bit higher corn acres, which we thought was possible. We saw, high corn prices through the planting period, and it really seems like U.S. farmers, to the extent that they could, really tried to make sure that corn acres got in the ground. And so we do see a slight increase in corn acreage in spite of declining corn acreage in the upper Midwest. That was sort of where the bulk of the big changes in these numbers were concentrated. Lower corn and soybean acres in North Dakota, Minnesota, South Dakota, likely caused by prevented plant and the excess moisture and late planting conditions that occurred in that part of the world. For the overall supply and demand picture, we see a continuation of tight grain and oilseed supply and demand balances. New crop supply and demand balance for soybeans remaining incredibly tight. Maybe some relaxation of that tightness on the corn side, given sort of potential demand headwinds related to exports and ethanol. That said, we remain in a much higher than average historical price period. We still see new crops corn futures at $6.25, new crop soybean futures in and around $14.60. Those are very high price levels, but ones that imply very high price volatility, especially related to the weather news that we have in corn. I mean, we've seen this kind of situation move, on a nice edge, really through the last few weeks, and we don't anticipate that situation changes. The market's going to be incredibly sensitive to weather news going forward.
All right, we'll turn it back to you, Todd.
Well, thank you very much. I'd like to thank a couple of other folks as well. The educational supporters of the program include the Agricultural and Consumer Economics Department here on campus. That's the department that both Scott and Joe belong to. Illinois Extension, of course, and the Illinois FBFM, the Farm Business Farm Management Record Keeping folks. If you have questions, by the way, put them in the box. We'll get to them in just a moment. We also have financial support for the webinars from the TIA Center for Farmland Research. You can find them at farmland.illinois.edu. Bruce Sherrick is the director here on the Urbana-Champaign campus. So that's centered right in the U of I College of ACES, the Ag College here on the U of I campus. Compeer Financial, Corteva Agri-Science, Farm Credit Illinois, the Illinois Corn Growers Association, the Illinois Soybean Association, and FS Growmark. And while you're writing in a few more of those questions, I'll remind you that we'd like to take time to thank you for joining us today. If you'd like to see this webinar again or any of the others that we've produced and a whole bunch of other stuff, you can always visit the FarmDoc Daily website, look under webinars in the archive, and you'll find it very shortly. Jim Boltz is behind the scenes. He's taking care of everything to make sure that the YouTube video is posted as well. Speaking of which, if you go to youtube.com/FarmDoc video, that's down there in the bottom right-hand corner of your page on the screen, you'll find this video, the 5-minute farm docs, and a whole bunch more. It's a really easy and simple way to get to our programming, especially if you happen to be using YouTube on your television. So check that out as well. Let's get some of the questions answered to begin with. There are some questions, gentlemen. One of them relates to Ukraine and that corn availability, the uncertainty there. They're wondering why the export number, I think, is lower for corn on your tables. If that corn's not going to come out of that country, shouldn't you see an increase? Can you maybe delve into that a bit more?
Yeah. Why don't you take that one, Joe?
Sure. I think there's two factors. One is that, while Ukraine and the United States have historically been kind of at least in the very recent past, kind of two major players in the corn export market, really kind of say dominating trade with China, who's become a major importer. They're not the only players, and so we have seen, a strong Brazilian corn crop, their second crop corn, quite large, and sort of expectations about much larger Brazilian corn exports. So there's sort of, a lot of moving pieces, and that's one of those moving pieces that doesn't sort of show up on the balance sheets that we talked about today. But really, the U.S. isn't the only other place in the world that people can get corn, and some of that's going to come from other parts of the world. And then the other part is just the potential for high prices to ration demand. We think that demand curves slope downwards when the price goes up. Consumers demand less, and there's a little bit of that going on as well. So I think those two factors kind of drive, us to think that maybe there's less bullishness about U.S. corn exports. I mean, we really, maybe thought that, we've had sort of 3 or 4 months since the war started for, U.S. export sales to really come on, and we really haven't seen it. So based on all of those factors, we think there's, potential for slightly lower, but still, historically pretty substantial U.S. corn exports.
A couple of questions. I will call them housekeeping questions. They're good questions that come up a lot, Scott. The first one has to do with the crop ratings that come out from USDA. They'd like to know whether those ratings take late planting into account and what that might mean with these ratings going into the fall harvest time related to late harvest, if there is any.
My answer to that is there's no direct accounting for late planting in the crop conditions ratings, but presumably that's folded into the observer's ratings. The crop conditions ratings are supposed to be, you rent in your local area, you rate the crop on a 5-point scale, from very poor to excellent. And that is explicitly based on, the normal yield in your area is represented by the good category. And so it's all relative to the normal yield potential in your area as an observer that is being surveyed in this weekly crop condition process. And so presumably, if a crop is planted late and that presents additional risks for maturity, or it's just not as large, that there isn't as much growth as you would normally see at this point due to the late planting, that ought to be reflected in the crop conditions ratings. Is it going to be perfectly reflected? Will there be some disagreements? That's certainly possible, but that's the mechanism by which late planting impacts should be baked into those numbers as well as you probably can do it.
The other question that comes up consistently and that I certainly have asked of the folks that I talk to on the radio and you as well is to what extent the strength of the U.S. dollar impacts the export market year in, year out, and is that different this year in any way?
I'll take a first stab at that. I mean, we have heard sort of that this very recent strength in the U.S. dollar has kind of crimped U.S. export demand. I think that's largely that can, for lack of a better word, a short run phenomenon. It's about sort of mismatches in expectations, short run expectations about relative currency valuation. Ultimately, commodity demand and sort of the quantity of commodities that gets used is, from year to year on that sort of time scale is less dependent on, the relative currency valuations. And so if the U.S. has corn and someone else doesn't have corn, U.S. corn is going to move to the world market and the other way around. But I think we can see some of that in sort of some of the timing and maybe some of the short run sort of like within year variation in export sales.
What are the chances, this question asks, that your prevent plant acre number would change significantly due to the high incentive to plant with the very high prices? I think I will make note here that in the acreage figures, USDA said over 4 million acres were left to plant for corn, and I want to say 15 for soybeans. Was that right?
Yeah, something.
And that when they Yeah, and the updated survey numbers from the from the Dakotas and Minnesota would be incorporated in that first crop production report, into the August reports, I should say.
I do know that that's a kind of a scary big sounding number for soybeans, but that mainly reflects double crop planting of soybeans to be done. And I think Joe and I checked before we came down here. Correct me if I'm wrong, Joe, but that was not too different than the number last year that wasn't planted for soybeans on June 1st. Was that right?
It's about, I think, something like 6 million acres. I'm just looking it up right now.
Okay, maybe I remembered
it. It's higher, but not as much as the corn number. So yeah, it's about 6 million acres more than in 21. It's higher, but again, we know that we had a late planting year all across the country here.
Right, and so that there's two issues. Does that signify that there's even larger late plant or prevent plant acreage than we projected? Possibly. I actually, our prevent plant forecast is only basically 1 million acres above average historically, even with the huge mess up in North Dakota. So I think we're pretty conservative on prevent plant, and for exactly the reason that the questioner suggests, with the high prices and the large incentives to plant. If it was at all feasible, I think you're going to plant something when you can this spring. And so it takes a really bad situation this year to choose prevent plant.
Are there other questions that we should take up before we close out our session, gentlemen?
There's always a renewable diesel question, Joe.
I missed that. Yeah, you're correct. I saw that, and I don't have it in front of me.
That's you.
Yeah, great question. Wow, my answer to that, I'm going to make it really short, is something's got to give on the soybean balance sheet, Joe, particularly in light of the kind of capacity increases that are scheduled on renewable diesel. It all won't fit with this 2.6 million acre drop in soybean acres. Yeah, I don't see how there's a real collision between the renewable diesel capacity expansion and what's going to be available in terms of total supplies of soybeans in the U.S. And to be determined.
How much do sort of alternative oil seeds kind of play into that, Scott? I mean, how much does this need to be soybeans, and how much it could be other
well,
crops?
That's a big point of debate about people, because the actual capacity expansion itself is dynamic. Exactly when those plants are going to come online is unknown. How much of traditional FAME biodiesel demand is cannibalized by the renewable diesel expansion, and then how big will be imports of renewable diesel, because there's a production capacity expansion going around the entire globe. So you like you say, there's a lot of moving pieces here, and there are other feedstock inputs. So the plants that are counting on getting going with renewable diesel, the renewable diesel new plants that are counting on soybean oil as their primary feedstock, I suspect, are beginning to look at, well, what are our alternatives moving forward? Because it seems to me that soybean oil is going to be very expensive, throughout the next marketing year, with the less supply and now, the big capacity expansion for renewable diesel that's on the horizon.
Thank you, gentlemen. We appreciate you taking the time with us today. Of course, you've been listening to a FarmDoc Daily webinar. You can find it again online at the FarmDoc Daily website, farmdocdaily.illinois.edu, or on YouTube at youtube.com/FarmDocVideo. Our panelists for the day have included Scott Irwin, agricultural economist here on the Urbana-Champaign campus of the ULI, along with his colleague, Joe Janzen, also an agricultural economist. Jim Baltz is behind the scenes. He'll get everything posted to the website. Thank you, Jim, for doing your job there so very well. And I hope that you have a great day. I'm University of Illinois Extension's Todd Gleason. Have a good afternoon.